All right, so welcome everyone to our first webinar focused on taxes. So, Thomas, you reached out to us, about a month ago at this point, maybe a little more, a little
Yeah.
less. And you wanted to help us, partner with us to advise some of the funded traders on their taxes. I think it's something that a lot of people are overlooking and really have no idea what to do. And we'll get into a little background on your story, but just from what I can remember, you at one point were a funded trader, right?
Yeah, I still am. Yep.
So you were funded and then you decided to pretty much go back to school and become an accountant.
So, I mean, basically a little bit about my background. So I was an accounting major when I first went to college. I'll be 32 this year. So that was a while ago. But then, things happened and I wound up going for a bachelor's in business administration. However, I've always been a numbers guy. I've always dealt with taxes. Family and friends have always come to me. I've been helping people with taxes since I was probably 18 years old. Fast forward. Obviously, since I had my bachelor's in business administration, I figured an enrolled agent would be better than moving forward with an accounting degree. Basically, a CPA and an EA with regards to taxes, we do the same exact thing. We are enrolled individuals, so we are enrolled to practice before the IRS. We basically do the same things with regards to taxes, tax returns. I'm also in the process of getting my MBA. So hopefully within the next year or to a year and a half, I should have my MBA as well. My main focus with regards to taxes is traders and investors. Like Angelo said, I am a trader and investor myself. So even before I actually became credentialed as a tax professional, the field of taxes with regards to trading and investing were always confusing. So I made it my mission to really dive deep and make sure I'm able to help everybody, because I completely understand what it's like to be confused with taxes, especially because there's so many different ways that you can be taxed or different requirements that are, put out there for traders and investors.
Yeah, we were chatting about this a little bit before the webinar. Most people are, I guess you could say, afraid, or they fear doing their taxes. They fear learning about taxes. Obviously, there's a bad connotation around, paying taxes and whatnot. And I think that it should be the opposite, right? I think that if you are a business owner and you do have the ability to, do some write-offs, work with an accountant and learn about everything that goes on, all the potential different things that you can do, it's actually very exciting, right? So
Right.
it's actually funny. So most people that are on here probably know Carlos, obviously one of the partners of Funded Trader, and one of the reasons that actually went to him to become a partner is because about a year ago, or about a year and a half ago, his dad's an accountant, his stepdad's an accountant, and he was basically doing some financial modeling for doing like a write-off for a vehicle for his business, right? So he was like modeling out like if it would make sense to purchase X vehicle for X amount of price, and what the savings would be, over a 1 to 2 to 3 year period, whatever.
Right.
And from looking at this, what he was doing to model everything out, that was like the first moment that I realized that, he was on top of a lot of different things that most people weren't on top of. You know what I mean?
Right.
It was like
Right.
really learning different things that the average person like isn't willing to learn.
Right.
Obviously, he's not a tax professional by any means, right? But it's like he was doing the research and like trying to figure out different ways to benefit his business that like the normal person doesn't do, right? So
Right. And that's the difference between somebody who, is going to be successful or not. Sometimes people just go, off a whim and decide to do something, but you also have to think about everything else in the background. And that's kind of the mindset you need. And it's okay if you're not a financial person, if you're not, financially sound or competent, so to speak, but at least find somebody who is and is able to help you with your financials when you're starting a new journey. So that's
Yeah.
awesome.
And it really comes down to being creative around the tax laws, right? So
Right.
there are obviously laws and regulations to stay within. And for example, there's one, I believe it's like section 172, where it's like if you have a vehicle over like 6,000 pounds, you can do like a depreciation write-off in the
A
first year.
179.
Yeah, or 179. Like you can do a full write-off for the depreciation
Right.
of the vehicle, like in the first year or something. So that was like
Right.
one thing that like Carlos was looking into, and I was just like, people don't know about any of this stuff. And that's why you should partner with a tax professional, right? Who reads
Right.
into the tax law and knows these things. That way they can advise you like, oh, you made X amount of money. You can potentially take advantage of this law or regulate this law and potentially do
Right.
this write-off and stuff like that. So I think it's
Right.
pretty cool that you're a trader because obviously you can hire any accountant, but when you're hiring an accountant that doesn't really deal with trading or whatever, it's not going to, the advisement isn't going to be as relevant. So
Right.
you're directly involved in investing in trading. So that's why all of you guys, we thought it would be a great idea to partner up with Thomas and, to have him advise some people who are willing to work with it. So yeah,
Well
let's
said.
let's pretty much get into it. You got the disclaimer here. We're gonna
Yeah. So
run through, guys. We're gonna run through the PowerPoint, and then at the end, we're gonna do a Q&A, and we're gonna do a giveaway at the end of the session. We'll get into what you need to do to get involved in the giveaway, but we'll do 150K account giveaway. We normally do that for webinars. So I'll let Thomas kind of take it from here, and then yeah, that's it.
awesome. Thanks, Angelo. All right. So just to get started, basically, we just want to let everybody know that the information we're going to go over today is really pertaining toward U.S. taxpayers. So I know a lot of you guys have reached out to me. Most of you guys are from the U.S., but there are a lot of international funded traders who are reaching out. And my best advice is to find a tax professional in your country who is able to help you. That being said, the information provided today is not financial advice. This is for educational purposes only. If you would like to speak to me regarding your tax situation, then you feel free to reach out. We can even put my information in the chat if you need. If not, find me on my website or my email address, thomas@traderstaxpro.com. All right, and the information being discussed may change in the future. Tax laws and procedures always do change, or they can. So the date of this webinar obviously is Sunday, February 6th, 2022. So the information we're speaking about is relevant today. Again, questions will be answered at the end of the presentation. Like Angelo said, they have a giveaway going on, so we will answer any questions at the end of the presentation. So a little bit about me. So obviously, I'm the founder and owner of Traders Tax Pro. I'm an enrolled agent in EA, which is the highest credential provided by the IRS. I am enrolled to practice before the IRS. Before ever becoming a tax professional, I was a trader and investor myself, or I still am a trader and investor. I trade Forex. Obviously, Forex is my number one activity in the markets. I've been trading Forex probably over 10 years now. I hold some long-term stock investments. Those I don't really pay much attention to, buying stocks, leaving them there for a while. Hold on to long-term crypto positions, not much, but my number one is XRP. I don't know about everybody else. I know everyone else is Bitcoin, Ethereum. I'm waiting for XRP to blow up. So, and I am also a proprietary trader. So my first funded account was with FTMO. And soon after, or not soon after, but I found out about the funded trader. And the reason why I reached out was because they offer, obviously everybody knows that they offer probably the best accounts for funded traders, in my opinion, and I'm sure in yours as well. So yeah, that's just a little bit about me before we actually get started into the tax information. All right, a little bit about Traders Tax Pro, my company. So what we do, we help traders and investors with their tax returns and bookkeeping. We prefer to help the smaller guys. because we like to see you grow into successful traders and entrepreneurs. Technically, as a funded trader, you are an entrepreneur. The tax treatment of a trader or investor depends on your situation, the who, what, when, where, why, how. So we figure that all out for you. We are fully virtual, so all 50 states, we're able to help you. And we use a secure client portal. So when you choose Traders Tax Pro, you're able to sign into your client portal account. It's easy to use. We're able to communicate. We have secure messaging in there. That is also where you upload any documents that I need safely, where you're able to answer any questions about your situation so that I can help you further, file your taxes, whatever the case may be. You're able to keep all of your documents there. So you always have it available to you to download or print. And lastly, in the client portal, you're able to e-sign your documents. So there's no need for a physical signature. Everything is virtual and you're able to e-sign. And there's our Instagram. Feel free to follow us at Traders Tax Pro. All right. So getting started into the information about being a funded trader and your taxes. So classification. So majority of you are not, you guys did not form any type of business entity, I'm assuming. You are an independent contractor. You perform contract work for the firm. You are not an employee of theirs receiving wages. This means that you're self-employed. So you invoice the firm for work completed, and that is how you get paid. You are an independent contractor. So on your tax return, you are considered a sole proprietor. You conduct business activity without an entity formed. You still report your activity as a business. So people sometimes don't understand that you can report business activity on your tax return, regardless if you created a company or created a business entity. Again, that's a sole proprietor. Now, we're going to go over the main one that most funded traders wind up forming, which is a single member LLC. So the difference between tax reporting as a sole proprietor versus an LLC is really just that limited liability. All business activities still pass through to your individual tax return as a disregarded entity. So that basically means disregarded entity just means that the business activity is reflected on your personal tax return. And as a single member LLC, you are able to elect what's called S Corp status. That means you'd be taxed as an S corporation. However, we'll discuss that a little bit later, because for the most part, you want to make sure you get the basics down. So, most important, in order to report your proprietary trading or your funded trading as a business activity, you must be treating it as such. What I mean is, and I have an excerpt here from the IRS website. So basically, a funded trader is conducting business activity, again, as an independent contractor. However, it is completely normal for new startups, new businesses to be in the negative for the first few years. And the IRS understands that. However, if you report losses from business activity for, let's just say over 2 years, the IRS might want to come in and potentially reclassify your activity, from business to hobby. So we're going to go over the guidelines that consider your activity as a business and how you can ensure that you are performing business activity. So the Internal Revenue Service reminds taxpayers to follow appropriate guidelines when determining whether an activity is a business or a hobby, an activity not engaged in for profit. In order to educate taxpayers regarding their filing obligations, this fact sheet, the 11th in a series, explains the rules determining if an activity qualifies as a business and what limitations apply if the activity is not a business. Incorrect deduction of hobby expenses account for a portion of overstated adjustments, deductions, exemptions, and credits that add up to 30 billion per year in unpaid taxes, according to the IRS estimates. So basically what they're saying is there are $30 billion per year in unpaid taxes because people are misclassifying their activity as a business when in reality it should be a hobby. So you want to make sure that your activity is considered a business, and we'll tell you how now. So in general, taxpayers must deduct ordinary and necessary expenses for conducting a trade or business. An ordinary expense is an expense that is common and accepted in the taxpayer's trade or business. We're going to go over this in a little bit. A necessary expense is one that is appropriate for the business. Generally, an activity qualifies as a business if it carried on with reasonable expectations of earning a profit. So the first thing is you need to be sure that you're doing what you're doing to make a profit. And obviously, what funded trader is not, so that checks off the first box. In order for this determination, taxpayers should consider the following factors. Does the time and effort put into the activity indicate an intention to make a profit? Obviously, like I just said, most funded traders or all funded traders, you're doing this to make money. Does the taxpayer depend on income from this activity? Obviously, that's what you're working toward. You're owning your own business. You're an entrepreneur. And this is what you want. Every single funded trader that I speak to, the one thing that they always say, I'm looking to quit my job one day. I want to do this full time. If there are losses, are they due to circumstances beyond the taxpayer's control, or did they occur in the startup phase of the business? So what I was speaking about before, it's okay if you experience losses in the beginning, as long as you're working your way to becoming profitable. Has the taxpayer changed methods of operation to improve profitability? This is a big one. So basically, as a funded trader, if things aren't working out for you, do you have proper documentation? And I just mean you can even have a journal. Are you documenting changes in your strategies or implementing new procedures in order to try and become profitable as a funded trader? Does the taxpayer or her advisor have the knowledge needed to carry out the activity as a successful business? So are you running your funded trading activity as a business? Are you doing the things that a normal business would do in order to stay in business? And obviously we'll go over more about that in depth in a little bit. Has the taxpayer made a profit in a similar activity in the past? Have you been funding trade? Have you been trading with a funded account in the past? Is this something that you do? Are you familiar with the field? Does the activity make a profit in some years? So typically to stay, classified as a business, they want to see that there is some profitability. Can the taxpayer expect to make a profit in the future from the appreciation of assets used in the activity? All right. The IRS presumes that an activity is carried on for profit if it makes a profit during at least 3 of the last 5 years, tax years, including the current year, at least 2 of the last 7 years for activities that consist primarily of breeding, showing, training, and racing horses. That doesn't pertain to traders. So again, they want to see that you have been making a profit in at least 3 of the last 5 years. So like I said, they're okay with you losing money, let's just say 2 years. But once they start seeing excessive losses over that 2-year mark, they want to make sure that you're really classified a business. So you do everything in your power to make sure that you are running your funded trading activity as a business. All right. So talk a little bit about profit and loss. So as a funded trader, the most important thing is to have your records of payouts from the prop firm. As a funded trader, you don't realize any losses with regards to your earnings because you don't realize those losses on a funded account. That's not your money. That is the prop firm's money, so they eat those losses. But you are still able to have a loss on your tax return on your Schedule C because your expenses may exceed your profits, but that's something completely different. We're just talking about earnings. Although you may receive a 1099 from the firm, you want to stay organized and keep all of your invoices and your receipts for payment. It's best practices to have proper bookkeeping. No business owner, including funded traders, should ever skip out on proper bookkeeping. And we're going to go over bookkeeping in a little bit. All right. So one important thing about payouts as a funded trader. So I actually got this question a lot recently. A lot of people are asking, should they choose crypto for their payout method? That is up to you, obviously, but I will tell you how that affects your tax return. So opting for crypto as a payout will make your tax return a bit more complex. For example, let's start off with the same example, $5,000. So you have a $5,000 payout from the, let's just say the funded trader, and you want it in Bitcoin. All right. So you are going to report $5,000 regardless of where it's held. That doesn't matter if you have that money in your bank account or if you have it in cash or you have it in crypto. You earned $5,000. That is going to be reported on your tax return as earnings. So let's give you a few different situations. So the first situation, let's say you immediately transfer the Bitcoin to US dollar. Regardless, that's a reportable and taxable event. There may be a small gain or a small loss, but nonetheless, we will report that on your tax return. So basically, you're disposing of Bitcoin, and that's a disposal of property, which is a capital gain or capital loss. The second situation, let's say you're holding your Bitcoin, so you get your $5,000 payout, and you just want to keep it in Bitcoin and let it grow and let it do what it's going to do. So if you hold onto your Bitcoin for 1 year or less, you're going to report a short-term capital gain or loss. And again, we only report the short-term capital gain or loss after you dispose of it. So if you hold on to it, you're not going to report any sale because we're only reporting sales. That's all they care about. They want to make sure you're paying taxes on your gain, especially if you made a gain. Obviously, if you made a loss, we're able to write that off up to a certain amount, carrying over to the future years. But over 1 year. So if you held that Bitcoin over 1 year and then you eventually sold it, you'd report a long-term capital gain or loss. And $5,000 would be your cost basis. That's basically what you paid or the value of those coins at the time you obtained them. And then lastly, let's say you swap your Bitcoin for a different crypto, let's say Ethereum. That is considered a sale of Bitcoin. Every time you get rid of one cryptocurrency and go into the next, you're selling the one that you got rid of. That is a taxable event as well. So the basis of your newly obtained Ethereum would be the value of it at the time of obtaining it. Regardless of your gain or loss from having your payouts made in crypto, you earned $5,000 as a business owner or funded trader. So $5,000 is what you earned in your business activity, regardless of you having it in cryptocurrency and it making something or losing something. So let's say you kept it in Bitcoin and Bitcoin went down, and let's say you pulled out at $4,000. You made a $1,000 capital loss, but as far as your earnings go on your Schedule C as a business owner, you still report that $5,000. Now, if you're not crypto savvy or you don't want additional reporting on your tax return, don't use a crypto payout method. Just go with something where you get cash. But if you are crypto savvy and this is what you do, then go for it. All right. So recognizing your profits at the end of the year, you should know exactly how much profit you realized for tax purposes from your funded trading activity. A common mistake funded traders make is you must include your retained profits on your tax return. So this means at the end of the year, if you left any amount inside of your funded account, that amount must be included on your tax return as taxable income. Lack of knowledge or innocent mistakes are not acceptable excuses in the eyes of the IRS. So people say all the time, well, I didn't know that. I mean, that's okay. There's things that we can do to fix that, but they don't accept excuses. So it's always important, if you're not sure, to seek professional advice. So let's go over an example. Let's say you're trading a brand new $100,000 funded account obtained on the 1st of January, 2021. Throughout the year, you're killing it. You're making massive amounts of money from your funded trading activity. And on the last day of 2021, you have been paid out a total of $200,000 in withdrawals. However, each payment period, let's say each month, you leave a $2,000 cushion in your funded trading account and never withdrew any of it. So basically, that's an additional $2,000 per month that's not included in your $2,000 at the end of the year, $200,000 at the end of the year. So for the total, for the whole year, for 12 months, you put $2,000 cushion away. So you have $24,000 of a cushion in your funded trading account. That means your funded trading account should have a total of $124,000 in there. Although you received $200,000 in actual payouts for the year, you're going to report $224,000 That is because you received that payout and you decided to keep it in there as a cushion. We call that constructive receipt in the world of taxes. So basically what it means is you have the money available to you regardless of if you physically received it. You technically did receive it and you decided to keep it in your funded account. Therefore, it has to be reported as earnings. Another quick example, just a quick one with math in front of you. Funded account obtained. So you have a $100,000 account. Funded account balance at the end of the year, 130,000. The difference is 30,000. So you retained 30,000 in your funded account. Your payout total for the year, so what you've actually withdrawn from your account is 50,000. So the total of your retained profits and your payouts is 80,000. That's what's reportable on your tax return. All right. So let's get into business expenses and deductions as a funded trader. So again, an expense is anything ordinary and necessary for the line of business you are in. So for an example, contractor gloves as a funded trader, that is not deductible. Contractor gloves are not ordinary and necessary for funded trading. Now, a TradingView subscription as a funded trader is deductible. Why? Because TradingView is ordinary and necessary for funded traders. Again, bookkeeping is extremely important for the purpose of keeping precise records and details about your expenses. This is the most important way to maximize your deductions. All right, so let's get into some common expenses and deductions for funded traders. So the first one, home office deduction. The term home includes house, apartment, condo. I can't see the words. The Zoom thing is in the way. Condo, yeah, mobile home, boat, or I can't see the word. The Zoom thing's in the way. What does that say after boat or similar?
Which one?
Similar property.
Similar property. I just want to butt in. I just want to butt in for a second. So
yeah,
guys, Corey's right. Yeah, definitely. Ask some. Feel free to ask questions, but I feel like most of the questions are going to be answered right throughout the session. So maybe hold the questions till the end, till we start the Q&A. And then at that point, if we still haven't answered, your question, then you can just ask it in the chat. So good way of pointing that out, Corey.
All right. So home office deduction. The term home includes house, apartment, condo, mobile home, boat, or any similar property which provides basic living accommodations. So qualification. Must use the space in your home exclusively and regularly as your principal place of business. The space does not have to be marked off by a permanent partition. So this can be an area in your home that is not marked off or its own room. But it does have to be used exclusively and regularly as the principal place of your business. So for a funded trader, it has to be where you are conducting your trades, where you are doing your analysis, where you are working as a funded trader. So we like to call this the home office deduction. So let's break it down further. Exclusively and regularly. So for exclusive use, the space will not qualify if it is used for both business and personal purposes. So if you sit on your couch and you watch TV and you are not, doing your work as a funded trader, and then you sit on your laptop on the same couch, and do your funded trading activity, you cannot deduct that portion of your home. You cannot use the same portion of your home for personal use and business use. It has to be business use only. Regular use, must use the space on a regular basis, not just occasionally. So again, if you own a business and you are constantly doing it, that's your work, then you are regularly using that space to carry out your duties as an owner of a business. And then business use, must use this part of your home in connection with your trade or business. Your home office may qualify if you use it exclusively and regularly for administrative or management activities of your business and have no other fixed location where you conduct substantial administrative or management activities. So basically, that just means you are using that space as a funded trader for all of your funded trading activity. You're not using it for personal use, and you are using it to run your business as a funded trader. So there's two ways to calculate this deduction. There's the simplified method and the actual expense calculation. So the simplified method is pretty easy. We basically deduct, the deduction equals $5 times every square foot of the area used up to 300 square feet. So if you have an extra room in your home that you use as a home office where you conduct your funded business or your funded trading business, then we can deduct it up to the amount of feet of that space. So let's say it's 150 square feet, the office, then we would just take $5 times 150, and that would be your deduction. The maximum deduction is 1,500 for simplified. The actual expense calculation. So what we would have to do is find the percentage of your home which is occupied by your workspace. So the way we would do that is take the square feet of the home office and divide it by the total home's square footage, and we will get the percentage of the home in which is occupied by your home office. And then from there, you take that percentage and you are able to deduct that percentage of costs incurred, such as rent, home insurance, security, utilities, etc. So there's two ways to do it. Simplified counts as everything. That means that we cannot take into consideration those things such as rent, insurance, security, utilities, but it's simple. $5 times the square footage of your office space, and that's your deduction. The other way, we take a percentage of all of your actual costs, depending on the percentage of your office space, in comparison to your home's total square footage. There is much more involved in determining your deduction, or even if you qualify, and that's why it's recommended that you reach out should you have any questions or concerns. So there's obviously we can get a little bit more in depth. Some of you, for example, live at home with your mom and dad, or one of your parents, and you would not be able to deduct your home office because you do not pay for that home. So if you're not paying these things that we listed, some of these things like rent, home owner's insurance, security, utilities, then you obviously cannot deduct it. All right, next one, self-employment tax deduction. So this goes for, every self-employed individual. So basically, self-employment tax includes both Social Security, which is 12.4%, and Medicare, which is 2.9%, which self-employed individuals must pay. When you're earning wages at a job, the employer will cover half and you cover the other half. As a self-employed individual, you are required to pay all of it. So the good news about that, aside from the bad news that you're paying more in Social Security and Medicare taxes as a self-employed individual, 50% of it is deductible. So the good news is that you can deduct 50% of your self-employed tax come tax time. So that's a nice deduction right there. The 50% deduction is only used to calculate your income tax. It does not reduce your net earnings from self-employment or reduce the self-employment tax itself. So basically, we are just taking 50% of your self-employment tax as a deduction to calculate your total income tax bill. Next, internet and cell phone expense. So funded traders need internet in order to work, right? So maybe you use your cell phone to carry out your trades. Who doesn't? Who doesn't have MetaTrader 4 downloaded on their phone today? You can deduct the percentage of your bill for those services. So what I mean, if you use your internet, whatever, it can be your internet or your cell phone or both. But let's say you use your internet 60% of the time for work as a funded trader and your cell phone 60% of the time for your job as a funded trader. You can write off 60% of each of those, each of the year, 60% of each of those bills total for the year as an expense. So let's say, your cell phone bill is $1,000 and you use your cell phone 60% of the time, that's a $600 expense deduction. Best practices is to keep detailed record of usage. What I mean by this is I recommend that all traders or business owners really in general, this goes along with bookkeeping, but this is more of a self-prepared type thing, have a journal. In that journal, write down or track almost like a time card as an employee when you're doing the activities that you're doing and from what time to what time on what day. Having a journal and a record of all of your activities really helps, especially if the IRS ever says, hey, can we see proof of this? Or you said that you use, your cell phone 60% of the time. Can we see proof of that expense? You can pull out your journal. You have your entire log of when you are using your cell phone, for example, for your trading activity. And it makes it much easier that way. All right. TradingView subscription. Let me make sure I didn't miss one. Okay. TradingView subscription. So obviously, if you don't use TradingView for charting and analysis, I don't know what kind of trader you are. I'm kidding. Majority of funded traders use TradingView as a key component to their success. It's obviously the number one charting software used by especially Forex traders or any trader for that matter. So it is ordinary and necessary for you to do your job. Therefore, it is a deduction. So just keep your receipt for your TradingView subscription, and we will be able to write that off as an expense as a funded trader each year. Education expense. So when you hear an education expense, you might think of like, college or an actual degree, but in the sense of owning your own business or conducting work as an independent contractor, you are able to deduct any educational costs you incur that pertain specifically to your job. So as a funded trader, any classes or courses that you take to improve your skills as a funded trader may be deducted as an education expense. The education must be directly related to the work you perform within your business. So, examples: taking a course to learn more about stock trading strategies. That is not deductible as a funded trader. Why? Because you are not bettering yourself as a funded Forex trader. Now, taking a course to learn more advanced strategies to implement when you're funded trading, that is deductible. Or if you take a new Forex course, there's Forex courses popping up everywhere. Most of them are horrible, but if you take that course, you are able to deduct it as an expense. Section 199A deduction. So Section 199A, also known as QBI, Section 199A allows for certain business owners to deduct 20% of their QBI, which stands for qualified business income. So funded traders are considered an SSTB, stands for specified service trader business. This means in order to qualify for the 20% deduction, your total taxable income must be less than $164,900 or $329,800 married filing joint. So basically, this deduction is good and good through, I believe, the end of 2025, through the job, TGCA, JA. I always get the letters confused. The Jobs Cut, the Tax Cut Jobs Act. So basically, again, 20%. It's a 20% deduction off of your qualified business income. That goes for funded traders as well. As far as funded trading activity goes, there is literature out there that says you only qualify when using a proprietary firm that is located within the United States. Anybody who uses the funded trader, they are American. So as opposed to using the other big guys, you qualify for that QBI deduction. This deduction, expires after 2025. Sometimes they renew them, sometimes they don't. We don't know yet. All right. And now the number one question that I get from those who are part of the funded trading community: what about my challenge fees? I get this question at least 100 times a day. I'm not joking. I get emails all day asking the same question. So we're going to go over it. Before I give you the answer, though, let's think. To be a funded trader, you need to have some brains, right? So I want everybody to type in the comments if you think challenge fees are deductible. Just type yes or no, and no cheating. If you've spoken to me about this already, don't tell anybody. You can still write in the comments, but I want to see what everybody thinks. Do you think your challenge fees are deductible as a funded trader? Angela, just tell me what they say because I can't see the comments.
And there's like a 50-50 split. A lot of yeses, a lot of nos.
Okay. All right, I'll give you like 2 seconds. Is there any more coming in?
Yeah, everyone's typing in. Yes, 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 no, no, no. No, because if they were, I feel like you would have talked about it. He's about to talk about it. How about that?
Yeah.
Let's see. Someone said no, you get a refund. Interesting.
You get a refund? What does that mean?
I guess once you get your first payout, no, the fee is refundable. So no, that's interesting. So yeah, let's pretty much get into it.
Okay. Yes. So if you're conducting business activity as a funded trader, you can deduct the cost of your challenge fees incurred. Challenge fees are both ordinary and necessary for funded traders to appropriately carry out their job. Now, obviously, if that is refunded to you, then no, it is not deductible because you're getting that money back. But as a funded trader, if you have, for example, failed challenge fees that are not refunded back to you, those are expenses incurred as a funded trader. You are conducting business activity and you are spending money on an expense, which is challenge fees, that is ordinary and necessary of you as a funded trader to pay. So we can deduct your challenge fees. Again, if you were refunded those fees, those are not deductible. All right. So estimated tax payments. So moving on from expenses and deductions, estimated tax payments. As a self-employed individual, you should be paying what are called estimated tax payments. Estimated tax payments are made 4 times per year. As a funded trader, your income is going to be hard to estimate. So the best suggestion is to pay each quarter based on your profits for that corresponding quarter. Should include income tax and self-employment tax. And don't forget about your state. So if you look at the table I have here, so we have the first quarter. So the first quarter, which is anything earned between January 1st and March 31st, your due date for the first quarter payment is April 15th. Second quarter, which is from April 1st to May 31st, due date is June 15th. And everybody always says this is not equal quarters, and they're not, but this is what they're called. Third quarter, June 1st to August 31st, the due date is September 15th. And then the fourth quarter, which is September 1st to December 31st, your fourth quarter payment is due January 15th of the following year. So basically, estimated tax payments are you paying the taxes you are required to pay for your earnings throughout the year. You are, or you should be, paying estimated tax payments if your estimated tax bill is going to be over $1,000 for the tax year. If you need help with estimated taxes, reach out to me. They're really easy. You can sign right on the IRS website and make your payments. Make sure you keep your receipts. During tax time, we have to report your estimated tax payments on your tax return so that we can account for that. If you overpay, then obviously you would have overpayment and you would be due that on your tax return. If you underpaid, you might owe a little bit more, but at least you make your estimated tax payments. All right, common entities and elections for funded traders. So without an entity formed, so without an LLC, for example, you are just a sole proprietor, and that is completely fine. For a single member LLC, one owner, disregarded entity, individual tax return, which means your business activity still flows through just like a sole proprietor does. S Corp status election. So you can elect your LLC to be taxed as an S corporation. S corporations will file an 1120S return. So this is separate from your individual tax return. Shareholders will receive a K1, which flows through to the individual return. So the S corporation does not pay taxes. Everything flows through to the shareholders, which in essence would be you. So you would have a corporate tax return and you would have an individual tax return. This provides business owners with an additional tax savings. So there are benefits to electing S Corp status. I recommend that funded traders come speak to me about this once you're consistently profitable and earning above around 150,000 per year. So basically, the way an S Corp works and the reason why it saves you in taxes, you pay yourself a salary. So that salary must be reasonable for the work that you do. However, because you're a funded trader, there's no necessarily there's not necessarily a salary that's reasonable for a funded trader. There's no jobs on Indeed that say, hey, we're looking for funded traders, we're paying this amount. So that's why I say at least 150,000. Once you, for example, let's say you pay yourself a salary for the year. Let's say you made 150,000 as a funded trader and you have an S corp status. So you pay yourself, let's say 100,000. So 100,000 out of 150,000 will be wages to yourself. You will pay those self-employment taxes, Medicare, and Social Security on that 100,000. That additional 50,000 that's sitting there will only be a distribution and is not subject to self-employment tax. So that self-employment tax totals 15.3%. So essentially you're saving 15.3% in taxes on $50,000 in that example. So that is how an S corp election can save you money on your tax returns.
Now I have a question for that, because we do an S corp. I'm just going to ask this kind of for the people. Is there anything that you need to do when you declare S corp status to keep the entity like in standing in order, like say you get audited, like do like meetings or documents, like that?
So it's I mean, when you elect S corp status, first of all, like I said, you want to be profitable, but it is a little bit more costly to uphold, because you guys have to do your meeting minutes, or whatever the case is, to uphold your S corp status. There's certain requirements to keep your S corp status. So that's why it's important to really consult with a tax professional or an accountant, to make sure that the decision you're making is the right one, and that you're sticking to the requirements like Angela was talking about. I can't think of you basically you have to have your minutes.
It's very minor, but it's just something to keep in
it's
mind.
record keeping, right?
It's basically like you need like a quarterly meeting, and then you need to keep meeting minutes, stuff like that. But it's something just to be aware of in the event that, and I'm sure, like you just said, you work with a tax professional in the event that you need to provide these things. They'll advise you on what to do.
Right. Exactly. Yeah. So S corp status. Now, again, if you're not making money, or if you make very little money as a funded trader, it's really not worth it to go S corp status, because you're going to wind up paying yourself full wages anyway and save no money in taxes, and actually spend more on tax prep, because you have two different returns: your corporation tax return and also your individual, and on top of that, the upkeep, like your minutes from your meetings, etc. All right. Why you need bookkeeping as a funded trader. So you are conducting business activity. All businesses should have their books well kept for organization purposes. So you'll be able to pull. So what you'll be able to do is pull reports from your business. You may be required to actually provide financial statements like a balance sheet and profit and loss statement for your tax return as an S corp funded trader. So if you make over a certain amount, when you're taxed as an S corp, you are required to provide a balance sheet and profit and loss statement, which essentially is created by an accountant or bookkeeper from keeping your books. And data, and also ensures that you maximize your tax deductions each year. I can't stress it enough. I see it all the time. People come to me and they have their expenses all over the place. They don't really know where they are or how much they are, and they have to look for them and search through their email and their statements. When you have proper bookkeeping, you have everything in place. You're able to look at your business as a whole all year round, any day, and say, this is where I'm at, this is what I've made, this is what I've spent, this is what people owe me, this is what I owe people, and it makes things much easier. Typically, I would not say a business can stay successful for too long without proper bookkeeping. So how Traders Tax Pros bookkeeping services would help you as a funded trader.
I want to comment on the bookkeeping thing real quick. Bookkeeping is such a bitch to do. So I would definitely recommend because I've made the mistake of waiting the whole year and then doing my bookkeeping at the end of the year. And it's just, it's literally just a fucking nightmare every time.
Yep.
So yeah, ideally work with someone who can do bookkeeping, whether it's quarterly or even monthly.
Right.
And even if it's, there's a fee, it's going to save you so much room. And plus, at the end of the year, one thing like this past year, I didn't have my bookkeeping with one of my businesses in good standing. And then because of the fact that I didn't have that, I didn't actually know what my like bottom line profit was or my taxable income was for that year. So then I didn't know how much I could allocate towards purchasing something that would have offset my taxes, right?
Right.
So that's where bookkeeping can be huge.
Right. So a lot of people, and it's funny you say that because a lot of people, it's more, I would say more than not, most people will say like and it's always during tax season. I need somebody to clean. Everybody calls it clean my books. Can you clean my books so you can prep my tax return? And cleaning the books basically means going through the bookkeeping process for an entire year, which is time consuming, going through a bunch of financials. And then on top of that, when you have to ask the account holder or the business owner, ask them a question about a transaction from, let's say, January of last year, they don't remember what they spent $12.19 on at Office Max. Obviously it's probably office supplies, but you know what I'm saying. People don't remember their transactions from that far back, especially when they have a million transactions that need to be accounted for and reconciled. So how we help, you'll never have to worry about your business financials with regards to keeping them organized and well kept. You'll have a bookkeeper who's also your tax professional. And, wouldn't you want the person preparing your taxes to truly understand your business and its financials? I'll help you set up your entire bookkeeping account via QuickBooks. So I use QuickBooks for bookkeeping. You simply would add me as your QuickBooks accountant, and I'll do the rest. Every few weeks, usually it's monthly, I'll go in, I'll clean up your books, I'll reconcile your statements, and do anything that I need to do to make sure everything is running smoothly. You also would have access to speak with me all year round. So any questions you have, if you need me to pull a report, or if you need my advice on something, then you have me. We can pull up your account and we can go from there. You can also continue on with your business without an extra task on your to-do list. So like Angelo was saying, have somebody do it. If you don't have the time, then just have somebody do it. A lot of people in the beginning will say, I'll do it myself. I'll either try out QuickBooks on my own. If you don't understand the basics of accounting, then you will not be able to do it yourself. Even if you take a book, if you have your book in front of you and you start your own bookkeeping, most people don't carry on with it, and you wind up losing yourself. And then at the end of the year, you're going to say, I need somebody to clean my books. So as a business owner, as a funded trader, if you need help with that, then reach out. Now, we're toward the end here. So for this webinar, I've decided to run an exclusive bookkeeping special. This is first year pricing, first 12 months. So just to go over everything, my normal pricing for the first year client for bookkeeping, initial setup fee. So the initial setup is where, you and I come onto Zoom, onto a Zoom meeting, and we will set up your entire QuickBooks account. We will get your bank account, your credit cards, everything set up into your account. I will categorize all of your expenses and make sure everything is running smoothly. So the initial setup, which again is about an hour to 2 hours, typically costs about $500. For 12-month bookkeeping annually, so if you just pay once per year, it would be $1,800 for the year. If you decide to go monthly, typically it's $175 per month. And then the average return, tax return discount offered to new clients is $50. Obviously, funded traders, the funded traders members get 75. So what I have here is if you sign up, and now I have tiers. So you either have, within the next 2 weeks, the next 3 days, the next 24 hours, or by 9 p.m. tonight. So the first one, sign up within the next 2 weeks. So this one expires on the 20th. If you miss out on the 3 days, the 24 hours, or the today special, then you have until the 20th, $250. So we cut that in half, the initial setup fee, $1,600 for your first year, or $160 a month if you decide to go monthly, and we will give you $100 off of your tax return preparation. If you sign up within the next 3 days for bookkeeping, you'll get $200 initial setup fee, $1,550 for the year, or $155 a month if you go the monthly route, and you will get $150 off your tax return preparation. If you sign up within the next 24 hours, and I actually messed up here, so please disregard the expirations. I did not edit those. I copy and pasted and never fixed them. So in the next 3 days, so the 3 days from now would be Monday, Tuesday, Wednesday. So Wednesday is Wednesday at 11:59 p.m. Disregard those expirations. Would be the 200, 1550, 155, or 150 off your tax return. Sign up within the next 24 hours. So I will give until the end of the day tomorrow, Monday. You'll get $150 initial setup fee, $1,500 for the year, $150 monthly, and $200 off your tax return prep for 2021 tax returns. And if you sign up by 9 p.m. tonight, it'll end at 9 p.m. today. You'll get free initial setup, 12 months, full payment, $1,450, or monthly, $145 a month, and $200 again off of your 2021 tax return. Basically, the way to sign up, you can send me over an email after this webinar. You can also go on my website and choose the live chat feature and let me know you want to sign up, and we can move from there. So that's.
I just want to comment on this. So I just I had someone clean up my books for 2021, and I believe I paid $1,800 for them to go through the whole year. I didn't do the monthly thing. So so someone asked the question, basically say they needed to do their entire books for 2021. Are you saying that by tonight, if they sign up, it would be $1,450 for 2021?
For bookkeeping for 2021, I will, if you need a full year's worth of books cleaned up, then I'll honor this for 2021. But this is technically for 2022 right now, moving forward the next 12 months. But if you need your 2021 books cleaned, I would obviously honor this for you as well, being a part of this webinar.
Yeah, and I'll say this: the company that does our bookkeeping currently for one of the businesses, they're charging $300 a month for their bookkeeping, which I thought was crazy. So
yeah,
you know what I mean?
No, it gets up there. It definitely gets up there.
Yeah, but if you have a business that's not doing over, 100,000 a month, tons of transactions, stuff like that, right? This price is more than fair. Like, you sign up by tonight and pay $145. Even if you can't sign up by tonight, you sign up in 3 days or 2 weeks. Trust me, paying $160 a month to have this stuff sorted is a game changer. And then also, I believe you mentioned this, if not, say in the event that you do get audited, right, a couple of years from now, because the first couple of years you're declaring losses, maybe you're just doing it on TurboTax yourself, and you're declaring some losses, and then all of a sudden, a couple of years from now, you get audited, and you don't have bookkeeping to back up all these, claims that you're making. Like, you're fucked, right? So you really want to stay on top of this stuff so you can just be ahead of the game.
Right. You always have your evidence. You always have everything you need in front of you, backing you up. That's the main thing I like to tell everybody all the time. As entrepreneurs or business owners, if you want to stay successful, then you need to be organized. You need to have everything in order. You can't just go off a whim. And most people understand that. I have a few, I don't know if anybody's in here, people I've worked with already, but a lot of the clients that I've worked with are moving forward with the bookkeeping, and that's a smart decision.
We have someone in here, they said they already filed their 2021 returns. I mean, you could always amend it, right? If you did do some bookkeeping, you could always amend your returns, even if you did file.
Right. Yeah, we can e-file, including the present year up to 3 years, e-filing. Otherwise, you have to paper file. But yes, So a lot of people this year have already come to me, for example, cryptocurrency is becoming a hot topic for the IRS, and they're starting to send letters out to people, people who haven't reported cryptocurrency transactions. So I've been amending a lot of crypto returns, but we are able to amend. If you make a mistake, an honest mistake, or you realize something was reported, then yes, we can amend your previous year returns.
All right, so let's hop into the Q&A part of the webinar. So guys, if you have a question, just post in the chat. We're gonna pick a giveaway winner at the end. All you need to do is post one question to qualify for the giveaway. And what I'm gonna do is I'm gonna actually just pull up really fast a Google Doc, and then I'll throw the questions in the Google Doc, and then that way underneath the video on YouTube, we'll have timestamps for all the questions and when they were answered and whatnot.
Awesome.
Questions, and then I'll just pick the questions out from the chat.
Okay.
So let me go ahead. I'm going to share my screen. Let me know when you can see it. You guys good? You see my screen?
Yep.
All right, so let's hop in here. We've got a bunch of questions here. We're going to run through about 10 to 20 questions, guys. Let's see. This person's got a freaking huge question here. Let's scroll up and start. So this was answered, but let's just start out with some basic ones. So this person said, so if you're not refunded, it's deductible, right?
Right. As long as you are conducting business activity and it is ordinary and necessary to the job that you are doing. So if if it's considered a hobby, if what you're doing is considered a hobby, it's not deductible. But if you are conducting business activity as a funded trader, then yes.
So yeah, I'll just start putting the questions here. We just went through this, but how can someone sign up for your bookkeeping after this?
So just reach out to me. Just send me an email or live chat on my website, or go to traderstaxpro.com, go to the contact us page, reach out, or DM me on Instagram.
Yeah, it's a good question. What are the expenses?
I mean, I'm always here to, so if I am a funded trader with the funded trader, do I automatically get the guidance from the Traders Tax Pro? So I'm always here to answer any questions anybody has. And everybody who's reached out to me knows that. A lot of people applaud me for being so attentive, and it's only because I like helping others. I'm not an asshole. So
yeah,
any questions you have, you can always reach out.
Clear though, right? Thomas is running a business. He's not a partner in the funded trader. Like, he's not an actual equity partner or anything. So he's a separate, partner. We're just lucky to have him, have access to him, but he is running a service. So if you guys do want to utilize his services, it is gonna be like a separate thing.
All right. What valid expenses that you can claim against your income? What are valid expenses? So we went over those. I mean, there's also other ones, but depending on your situation, once I speak to you and once I see your stuff, usually I'll go back and forth with a client, be like, did you have any bit of this? Did you have any of that? But really, honestly, the main thing to realize is anything ordinary and necessary. So any expense would be considered ordinary and necessary for you to perform your job as a business owner.
I do have a question. In the event that a lot of people sign up with you, right?
Yeah.
How would you handle having a very increased amount of volume? Like, how accessible would you be? Are you looking to expand your business? What's kind of the scalability of working with, say all of a sudden 300 funded traders sign up with you? Would you be able to handle it? What would your plans be? Whatnot?
Yeah. So I'm able to, obviously I would be able to handle like 300. But if I did, or once I do get to that point where it becomes excessive, I do have other resources. I do have other colleagues that are willing to come in and work on my business with me. A lot of people show interest in this and are excited about this. So I have, obviously I haven't reached out to some people. I have a lot of accountants in my family, CPAs, but I also have other colleagues and friends who are very interested in helping me out. And so I would be, I would have others come in with me and help me out. But at this time, I can handle everything on my own. Once it gets to that point, I will definitely let everybody know that we have somebody else coming on board.
Cool.
Let's see. Wow, we got a lot.
Yeah, no, we've got a lot of questions here. So please share if one can claim non-capital losses from previous years like 2020, 2021, and also some insights on how and what forms. Thanks.
Okay, so you need to report your capital losses, or no, non-capital losses. What can you explain to me what you mean by non-capital losses? I don't know who asked that question, but basically anything that happened within a tax year, that has to be reported in that tax year that it happened. You can't have something happen in 2020 and then want to report it in 2021. If that's the case, you would have to amend your tax return for 2020 to accommodate what it is that happened. What do you file the failed challenge payment as? So typically, I put it in as a commission or fee as for doing business. It would be or you can do another expense, any other expense. Typically, you're able to label it, in which case you would do a challenge fee. But usually I put it in commissions and fees. Wouldn't we be classified in the consulting business rather than actual trading? Yes, that's right. So you're an independent contractor. You're not actually trading, because if you were actually trading your own account, you would not be able to write off business expenses without trader's tax status. We are essentially trading on a demo account that is linked to a main account. We are only offering our services via the data of us entering and exciting. So we are offering the funded trader a service, right? You are an independent contractor. As I said, you are not trading on your own account. Again, if you were trading on your own account, you are not allowed to consider your trading activity as a business without what we call trader's tax status. That means it's basically you have to be a day trader and you have to qualify. And the thing about that is there's not exact qualifications by the IRS put forth, but rather precedent set forth by court cases of the past. So if somebody ever had a question, and I could see people, my phone is going crazy right now. So as people just try holding off on calling me until we finish this webinar.
We've got a lot of questions here. So let's get into this. Person had several questions here. It looks like they're
okay. All right. So is it better to operate a separate bank account? Of course. So if you create a business entity, so let's say you create your LLC for funded trading, the first step you want to do after receiving your EIN and receiving all of your article of organization is go to the bank, get a business bank account. Once you have your EIN, you're able to do that. Go to the bank of your choice and go get your business bank account. And this way we have all of your business activity flowing through your business bank account and not intertwined in your personal matters. I read the IRS cares about what is coming in and out and what is going out. Thus, having separate account makes easier. No, it's for organization purposes. I recommend that everybody that I work with has a business account or a separate account for any of their business matters. Say one has 30K retained funds in the account. If that 30K was lost either by violating the rules or trading, can it be claimed as a loss? Yes. So when we went over not really being able to claim a loss on business activity as a funded trader, that's in general. But let's just say you reported $30,000 of gains that you retained in your account. So let's say in 2021, you retained $30,000 in your funded trading account and you reported that $30,000 as income, and then you lost that $30,000 in 2022, then yes, that is a business loss. You lost that. That was your money that you lost. Do you mean, I don't know if this person means like like general Forex, like regular personal Forex trading as a non-capital loss from previous years? Please share it. This is the same, it looks like
I
the
think
same
he's I
person.
think he's meaning that say in non-capital losses, say in 2019, this person, I'm trying to think what a non-capital loss would be. Maybe challenge fees. Maybe in 2018 they spent $20,000 in challenge fees,
Right.
never claimed those
So
losses.
yeah, so I mean, if there's activity that you didn't report in general, you have to amend your tax return. So in 18 or 19, if there's things that you didn't report or things that you didn't expense or whatever the case may be, then you have to amend your tax return. We have to go back and we have to amend your tax return. I will let you know that amended tax returns are a little bit more work. Because we basically have to prepare and file an entirely new tax return along with attaching a 1040X. So it's not even just that we're fixing things, we're actually creating a whole tax return, and then we have to compare it to what was put versus what we put. So basically reporting what the differences are.
So basically, it's a bitch.
Yeah. But if you have stuff that you need amended, then you do the right thing and have your tax return amended. Can I deduct buying new equipment like laptop, desktop, monitors, switches, MT4 indicators? Okay, so things like equipment, so laptops or desktop computers, monitors, those are depreciable assets. So we, of course, so let's say you started funding in 2021 and you bought a new computer and a new monitor. Those are depreciated over 5 years. Again, what Angela was speaking about earlier on was section 179, where you're able to deduct the full cost of an asset in the first year it is purchased and placed into service. So if you bought a laptop and you bought a monitor or whatever, then those would be either depreciated over 5 years, which means that you get to expense the amount paid or the basis of that equipment for 5 years, divided into 5 years. There's actually tables to follow, so it's not equal, but or we can 179 it, which is write it off in full the first year. As far as indicators go on MT4, if you're paying like a subscription fee, that may be considered like a subscription fee that you're paying, and you can expense that. If it's ordinary and necessary for you doing your job, then yes. The estimated tax, does it have to be accurate? No. So it depends. Really, it depends, because what you're paying with your estimated taxes is your income tax and your self-employment tax. So if you're paying your income tax and self-employment tax, first and foremost, your income tax depends upon your tax bracket. So it depends on how much money you're making. And then you can't forget about your state either. So everybody's state is different, but your estimated tax payments do not count towards state. You pay those separate. So any payments you make to the IRS are not going to your state. You make your estimated tax payments to your state separately. So again, it depends on your tax bracket. And then obviously you would have to account for your self-employment income. If you need help, reach out. I'll help you with that. Again, if we're doing your bookkeeping, it'll be easy for me to be like, hey, hey, Angelo, it's time to make your estimated tax payment, and this is how much we're going to make. Obviously, it doesn't have to be accurate. It's going to be close enough. If there's an overpayment, you'll get that back. If there's an underpayment, you'll pay the remainder. If you have an LLC that was not specifically created for funded trading activities, would add these activities and implement what you've talked about by having a DBA, or is it advisable to just create a separate LLC specific for the trading? For funded trading activity, if you have an LLC that's already conducting other business activity, it's advisable that, I think for the most part, anybody would advise that you just create a new business entity, because then you're intertwining. I mean, it's completely fine. People do it all the time. They create DBAs, but the problem is if you have company A and company B under one LLC, and the business matters sometimes are intertwined. So if somebody, let's just say you're selling on Amazon, or I don't know, you own a car wash, and somebody sues your car wash, your funded trading activity is under your LLC, therefore they can come after you in all. If you have two separate LLCs, then the business matters of each are separate, if that makes sense.
Yeah, no, to me that makes total
Yeah.
sense. So you should
Yeah.
have an entity for each business.
Yeah.
You don't want to, like you said, you don't want to have all your business, like business for car wash, business for consulting, business for trading under one entity.
Right.
All of a sudden you get sued, they can come after all of those, all
All
that.
of it. All of it. Right. Right.
We got a bunch more. I'm just gonna start posting them as they come in to just clean up
Okay.
the stock a little bit.
Cool.
So guys, just a reminder, post one question in the chat and that will qualify you for the giveaway. We've already gone through a bunch of questions here. We're gonna keep going for another 10, 15 minutes or so. So post some questions in here. We'll try to get to as many as we can.
So Angela, you're gonna pull a name for the giveaway when?
Yeah, I'll just pick one person who posted in here at the
Okay.
end. And
If you all right, so we can also I'm having t-shirts made, so I'm gonna send out a t-shirt to like 5 people. We can choose 5 extra names and I'll send a t-shirt out.
All right, word. Yeah,
If
after
you
the session, I'll pull the chat history and then we'll just go through it.
okay. So if you're chosen for a t-shirt from me, I'll just need your information. I'll need your address and your name. It will take a little while because they need to be made, but you'll get one.
All right, we got a few more questions in here, so let's start off with this one.
All right. If I'm looking at hiring more than one business, would it be best to have an S corp as a holding company? So some people do this. Some people have a holding company as like a management company. It's really, it depends on your needs and what type of business you're in. But in general, it's not really too complex to be a funded trader. So I wouldn't say you need to go that far. If you are a funded trader and you're creating a business entity for yourself, create the LLC, see how profitable and consistent you are, and then move forward with the S corp status. If you own crypto but have not sold it, do you have to report it? No. So you don't, I mean, now there is a question on your tax return that says, are you involved with crypto? So, I mean, there's no tax, but you have to report that you're involved with crypto. So there's a yes and no checkbox. And if you're checking no and the IRS knows that you are involved with crypto, they may send you a letter saying, you know, we know that you're involved with crypto and you said you're not. So there's no reporting any values for holding onto crypto and not selling it. But once you sell it, once you swap it, once you earn it from mining or earn it from staking, yield farming now is a new thing. Anytime you earn crypto that you didn't buy, you have to report it in that year. Anytime you sell it, you have to report it in the year that you sold it. And there's all different, like I said, all different tax treatments on crypto depending on how you earned it or whatever the case may be. So like mining and staking, for example, is considered ordinary income unless you're mining it as a business. Then it's a business activity. Selling or swapping is a capital gain or loss. So it just depends on how you obtained it or what you did with it and how long you've had it, if it's a capital gain or loss. So if I pay the 12-month price, you will honor that for 2021. Also, if I form my LLC in November, can I deduct expenses from January? No. So you cannot deduct any expense from January for 2021. If so, so you're saying if you pay for the 12-month price, it will honor it for 2021. If you have all of your information available for me, so basically if we set up an account and we are able to clean your books for 2021, then yes, I'll honor that price for 2021. And if you want to move forward with 2022, you know, we can speak about that then. But if you formed your LLC in November, can you deduct expenses from January? No. You will deduct those expenses in your 2022 tax return next year.
Got some good questions coming up, actually.
Okay. For first time funded traders, when would be the best time to start the services? As soon as you are, I mean, as a funded trader, you are in business. Even if you don't have a funded trading account anymore, you may be considered an independent contractor still. So if you are spending money on the business activity that you're conducting, then anytime you're ready, you can sign up. But especially once you start making money and you start actually having more and more expenses come in, you're going to want somebody to keep track of everything for you. Let's say, boom, you're a funded trader by the end of the month. Obviously, you'll get paid out every month. People are going to spend their earnings. Do you have a rule of thumb for how much you should be setting aside to ensure there's not overspending profits? All right, so I get this question all the time. I mean, again, you're going to be paying your estimated tax payments, so everything's going to be based on what you made for that quarter. But as far as spending goes, like let's just say you're getting paid out every 2 weeks or every month. I tell everybody it's always better to put more away, because what are you going to spend that money on anyway? Something you probably don't need. I always tell everybody no less than like 35% of your earnings put away in a savings account, but all the way up to 50, because it doesn't hurt to have a little savings account. You're probably not going to spend 50% total, but it's always nice to have some money put away. Yeah, there's still, is there a penalty for not paying estimated quarterly taxes? Yes. There is penalties, or there could be, there may be. Not necessarily everybody, it depends. If you owe over $1,000 in taxes and you didn't pay, then yes. That's a really good question. So you're overseas. Not gonna lie, I'm not too well versed in expats. That's what you're considered. You need an expat professional. I do actually have a colleague who works with people, US citizens overseas, and I am in the process of learning more about it, but I don't really work with people overseas yet. But if you want, you can send me a message and I can give you more information and go over it with my colleague. Is there any tax benefits to having a holding company? That really just depends on the type of business you're in, honestly. I know that like real estate investment companies, they tend to do this a lot, or they consider their holding company a management company, but that just depends on the type of business that you're in. And to be honest, in the field of funded trading, I don't see any benefit. Okay, so when I say bookkeeping, I mean per business. So if you have a business as a funded trader, that's the books we're going to keep. You can't have the same bookkeeping account with two separate businesses. So if you have, let's just say, a car wash and you're funded trading, we're taking care of your funded trading. If you want me to take care of a car wash too, that's another account. And obviously that would be at a discounted price if you have two businesses, but we're not able to bookkeep for two businesses in one account. Only because then you'd have financials all over the place with two different businesses. But individual Forex trading, you don't really need accounting for. You're not going to be able to write expenses off for personal Forex trading, unless, again, you have trader tax status. But individual Forex is different than, let's just say, trading stocks or crypto. Individual Forex accounts are basically, they are taxed under Section 988. And that means that they have ordinary gain and loss treatment. The good thing about that is, unlike crypto or stocks or any other, capital loss, you're only, for capital losses, you're only restricted to 3,000 per year. Everything else carries over to future years. But personal Forex, ordinary losses in full are deductible from your income, as long as you have income. Otherwise, those losses are wasted. What do you file the failed challenge payment as? Commissions and fees. I lost 25,000 in trading last year. with no return. How much can I claim on tax return? I are you saying that you lost 25,000 in challenge fees or in trading? Because those are two different things. I don't know what you mean. If you lost in challenge fees and you are a funded trader treating your activity as a business, then you can deduct the $25,000 if you're speaking about challenge 25,000 in challenge fees. If you're talking about trading, I don't know if you're talking about trading stocks or trading personal Forex or trading your funded Forex account. If you're talking about a personal Forex account and you lost $25,000, then you'd be able to deduct that against your other income, your other ordinary income, as long as you have it.
All right, so we're gonna finish up. We've got about 5 questions left. We're just gonna wrap it up with these.
Do you offer LLC setup services? I can certainly help if you need. Just reach out and I can help you with that. It's not that hard. There's actually, it's really easy to do yourself.
Yeah, we use.
You just go through your.
I've used Rocket Lawyer for like pretty much all of mine, and it's so simple. It's like a couple $100. They send you everything you need.
Yeah.
They give you a registered agent and everything. So
Yeah,
check that
it's
out.
pretty easy. Yeah, once you do your first one, you'll be able to do it on your own. Do you cover U.S. territories? If you file a U.S. tax return as a U.S. citizen, then sure. So I have a LLC, but it's for my personal trading. Can I use the same one for funded trader, or should I create a? You should create a new. And just to let you know, I don't know. You're not being specific, and I don't know if you need personal Forex trading, but it doesn't really matter. Just know that you cannot deduct expenses as a trader, as a business, unless you have trader tax status. So if you are filing a tax return and you are deducting expenses as on your personal Forex account and you don't qualify for trader tax status, just be careful. Should I S corp and take distribution or take an owner's withdrawal for full amount? I mean, it doesn't really. If you want to buy the house in cash, should I?
So I actually have a question that goes hand in hand with this one, right? So say you have an S corp and you're being paid out. It's technically categorized as what, a dividend, the money you get paid out from an S corp.
Yeah.
So say you're getting paid out by an S corp, you're getting paid a dividend, and say for that year you make a couple $100,000. Let's just say you make 200,000 in dividend income from the S corp, right?
Right.
Then you go ahead and you turn around and that year you buy a house, right? Say you buy a house for 150,000. Let's just say that number. I've heard that you can depreciate real estate against passive income 100% in the first year. That's at least what I've heard. I don't know for sure. How would that, like, how does that work? Do you depreciate, like, so you take a mortgage out? Can you depreciate the full amount of the mortgage, or is it just the down payment for the mortgage?
That's actually a really good question, and I honestly don't know. Let me see.
Yeah,
so you're saying
that's something.
So you're saying
go ahead.
Depreciate. You're saying depreciate your home through your business, through your S corp.
I'm saying depreciate the home against your dividend, your passive income that's coming into technically your personal income.
That's a really good question.
Yeah.
I actually don't know that off the top of my head. I'm not gonna lie.
Yeah, I think that's something that I'm trying to figure out. Yeah, I know that it's possible. I'm just trying to get more clarity on that.
Okay, I can definitely find out for you. Again, I know so the tax community, basically, we like to say, so, like, sometimes you see cutthroat industries, but the tax industry is not like that. So when you're a tax professional, everybody's extremely helpful toward one another. So you just find groups of people and we just bounce ideas off each other, and one person may be better in one subject than another, and we just always go to each other. So I will definitely ask in my group of colleagues and friends and family, and I can get back to you with that.
Yeah, because think about it like this, guys. If you make 1.5 million from your S corp from that dividend, and then say you can depreciate 100% of real estate against your passive income, and then you go ahead and buy a house for $1 million, maybe you take a mortgage. That's what I need clarification on, is if you take a mortgage, if you can depreciate the full amount of the mortgage, or is just the down payment you can depreciate. But
Right.
say you take out the mortgage for $1 million home, then all of a sudden you can write off $1 million against your passive income, which reduces your tax bill from 1.5 to 500K. Like that's
Right.
a huge swing. And then you're using that, the money you would pay to the government, which probably would have been like 20-30% of 1.5 million, which is like, 300,000, 500,000. That instead you have more access to, and then you can use that towards the home, right? Stuff like that.
Yeah, I'll definitely ask. Just Angela, shoot me a message after with your exact question, and I'll find out.
Yeah, guys, I'm gonna utilize Thomas too for some services. So, he's here to benefit all of us, even including, ourselves. We have some accounts that we work with, but we're gonna utilize his services as well. So let's go. We got the last question here. If you move crypto from one exchange to another, is this considered selling crypto?
No, if it didn't change character, so to speak, if it's a Bitcoin and you're moving Bitcoin from wallet to wallet, then no. If you're swapping that Bitcoin and into Ethereum, then yes, that's a taxable event. You're selling the Bitcoin and obtaining Ethereum. But if you're just moving Bitcoin from wallet to wallet or exchange to exchange, it's still Bitcoin and it's still yours. Then no, you didn't get rid of it. It's not a taxable event.
Yeah, that's a great question. So this is pretty much going to conclude the Q&A part of the section. I think what's so valuable is the fact that he's involved in the industry himself, right? He's a funded trader. He's now learning more and more about crypto. I think doing taxes on crypto, and I have so many questions about, just like the last one, if you're moving from one exchange, if you're swapping, all of this stuff, right? There's so much to learn about like tax events for crypto and then everything else in regards to trading. So overall, obviously, Thomas is someone who's very knowledgeable on everything here. He's a tax professional. Again, if you guys want to reach out to him, he'll go ahead, share with you how you can get in touch with him after the call. Again, the deal and everything. If you missed it, you can go back, watch the replay. Again, we're going to pick one winner for the giveaway for the 50K challenge, and then we're going to pick 5 people for the t-shirts that Thomas is gonna send out to you guys. So yeah, thanks again, for hopping on, and we look forward. We're gonna do some more sessions like this in the future.
Definitely. And for everybody that's still in here that has, I have texts, I have DMs right now, a few missed calls. I'll get back to you today. There's a lot of them. I guess because you guys have questions for me, but I'll get back to you within the next 24 hours. I literally probably have like 25 DMs now, 2 texts, 4 missed calls. So I'll get back to everybody. All right. And I appreciate the follows on Instagram. So if you guys haven't followed me already.
Hell yeah. Well, thanks again, Thomas. Thank you guys for sticking on for the entire session. Best of luck this week.
Thank you.
And
we'll speak soon.
We'll chat again soon. Peace out.
Awesome.
Everybody.
Thanks, everybody.